JC Parets, we found you, the founder of Eagle Bay Capital, 10-year market veteran and technician. JC, we missed you the last couple of weeks. What have you been doing?
I miss you guys too. I was doing a little traveling. I'm trying to take care of business.
Oh, okay. All right. Well, did you have time to keep an eye on the markets?
To say the least.
All right. Well, we're kind of doing a little bull, little bear thing here. We've had a couple rebounds off that flash crash. I don't even think we've talked to you since the flash crash here. Very unusual event. First, let's go to that. How did you fare that day?
Well, I mean, I wouldn't necessarily call it a flash crash. I mean, we're talking about a consolidation since late March. I mean, every Thursday we're sitting here talking that there's been zero reason to be long S&Ps. So we broke down. The resolution out of that consolidation was to the downside, and we had
JC, I just want to interrupt you for a JC, I'm going to interrupt you here for a second. So this is, kind of a pet peeve of mine, which is a lot of people have been saying this wasn't a flash crash. But how do you define a flash crash? Because Costco went from 138 to 117 in 2 seconds and then comes all the way back up to 135. Pepsi falls 25% in a matter of seconds. GE falls 24% in a matter of seconds and bounces all the way back up. Now, I'd say the overall market maybe could argue that it didn't flash crash, but if you're talking individual stocks, there was about 50. Like Baidu lost 50 points that day and bounced back 30 of it in a matter of 2 minutes. Like, how do you not call that a flash crash?
Well, let me finish what I was saying before. You had a very tight range, a very unusually tight range across markets, and the resolution out of such a tight range tends to be extremely volatile, regardless of the direction of the resolution. So I don't think that was unusual at all. In terms of what is a flash crash, I'm an Edwards and McGee guy. So Edwards and McGee never defined what a flash crash was. So I'm not going to be the guy that's going to tell you what is or what is not a flash crash. I will tell you this. When you have a ton of electronic orders, stop losses galore, and they all get triggered at the same time, you're going to get accelerated selling and therefore a bounce. That's just the sort of market environment that we're in. That's based on technology and all of the electronic orders, when they all get triggered at the same time, that's what's going to happen. And that ain't the last time we're going to see that. We're going to see that again. So, when you look back to the 1940s, when Edwards and McGee were writing, books and things like that, we didn't have those sort of electronic orders. But now that we do, that's what's going to happen. So get used to it. We're going to see that again. That I promise you. So as far as when you talk about Baidu, when you talk about Pepsi, things like that, when you talk about quote unquote flash crash, I don't know what the definition of that is. I'm not gonna pretend to know what it is. But when you have so many electronic orders getting executed at the exact same time, that's what's going to happen, and it's going to happen again. That's just what technology has done to this market.
JC, whatever you want to call it.
So,
okay, yeah. So whatever we want to call it, flash crash, no flash crash, it happened. Now all we have is the technicals to look at here. And I know you're a big technical trader here. And when you look at a chart like Baidu, B-I-D-U, stock made that ridiculous low down to 100, come back up here. Now it's around 150 again. Do you look at this chart and say it needs to eventually go retest that 100 ridiculous low? Or do you just take that, point as that was just a point in time? That was the capitulation low. That's not to worry about here anymore. How do you analyze the daily charts of Baidu with that ridiculous tick on it?
Well, I think that I think that the support and resistance is pretty well defined. I mean, you got those highs. Here, let me pull up the chart there for you. I can think off the top of my head, but I want to give you some exact levels. Give me just 1 second. Well, I mean, I'd be looking at around this 153, 154 level, going back to the resistance in 2011, 2012. that was support in 2013, right? Then we broke down, right? And that's where we are right now.
So what about support? Okay, so resistance well defined, but what about support? Because just looking here, like I was just saying, we took out a lot of, air there down to the 100. Do you look at the 140 now, or are you still looking at that 100 level? I just don't know. Like me and Joel have been talking this on the show for about a week and a half here now. We don't know how to analyze a lot of these daily charts because of these ridiculous ticks that are on it, these outside trades that happened, down at $100 on a stock like Baidu. I just don't know how you find support here now.
In terms of support, is not really. You know what? I'm going to give you a good answer to this because I've given this a lot of thought myself, and not just Baidu. For me, it's more so overhead supply, and I've written about this. I don't know if you guys have gone to the blog at all, but I've been writing about how now that we have broken all of these support levels, and you guys ask me every single Thursday. JC, what do you think about this market? JC, what do you think about S&Ps? JC, what do you think about S&Ps? And I say every single week, I don't see any reason to be involved. It's a hot mess. We're still in a range, and we're going to wait for the resolution out of this before we get involved with these indexes. There's better places to be. Okay, so now we resolved out of that range, and we broke down. So all of that former support that we've been talking about since late March, where I've been saying there's no reason to be involved in this market, now that becomes overhead supply. All of the just please get me back to break even sort of crowd is waiting above head to sell to you. And that's what I see about the markets. And you can say that about a lot of stocks. I mean, I'm a market buy maven, as you guys always say, and we sell our research, and you guys do our back end, and you guys do all that stuff. And all of our members know this. And there's a common theme within all of the reports that I've been writing over the last couple of weeks. A sell strength, a sell into that former resistance, that overhead supply. That's a problem. Now, I'm not a day trader, far from it. I look out weeks and months, not days and minutes and hours.
JC,
so
let me hop in here.
What is Baidu going to do today? I don't know. But I certainly, from an intermediate term perspective, I think there's a ton of overhead supply, and I would be a seller into strength. Particularly towards 178, 180. Doesn't mean that you can't trade that. And if you're a short-term day trader, that's a tremendous move. But that's not my time frame.
Yeah.
And I'll tell you something else. I look at momentum, and momentum on that quote-unquote flash crash low, whatever that means, all hit oversold conditions, and I haven't seen any bullish divergences anywhere to suggest that we're going to get a strong, violent counter-trend move to the downtrend that we're in a lot of these stocks. So I'm a seller of strength. I'm not a buyer of dips. So when you ask me where support is, I really don't care where support is, because I'm not going to be that guy that's going to be buying these dips. I'm going to be the guy that's going to be looking at resistance overhead and selling that resistance to you. That's what I think is more important.
I think is all you guys are kind of opposite ends of the spectrum here. I mean, I think that you're really backing up what you've been saying in the market here. The resistance is resistance in the S&Ps. I mean, we had a rebound high to 1992.75. We hit 92 yesterday. The resistance is there. What we're trying to hone in and look at, is to find the intermediate levels of support. And right now, I guess you could say 1900. And JC, just to, go to your thought here, you just don't really see any support in this market. There may be support ahead of the flash crash low, but somewhere in between it. But, your philosophy right now is you're downright bearish the market, and you don't see any support in sight.
There is support. I just don't. It's just not relevant to me.
What about interest rates?
I'm not a buyer of weakness. I'm a seller of strength.
How do you cover? You got to cover shorts, though. I mean, events, right? Do you have any? What are some of the shorts that you're looking at in the market?
Well, if you're looking at S&Ps, you're looking at. I'm looking at 182, 183 level on SPY. In terms of covering shorts, when I tell you. There is an uncanny, and people who are reading my reports and pay for our research know this. I mean, I've never seen so many price or downside targets. So many of them have been hit. I mean, to the point where I don't want to say all of our downside targets across the board have been hit, but pretty much everything has been hit. So when I go name after name across our reports, it's our downside targets have been hit. If we get back to this level, and we're talking about overhead resistance, we want to sell into that strength. I mean, that is like unanimous across the board. And when it talks about like where we're shorting, I'm not shorting anything right now because our downside targets have been hit. I'm more of I hope we rally so we can sell into that strength because there's so much overhead supply that would be a tremendous selling opportunity.
All right, now I know
kind of see where my head is at.
Yeah, and I mean I know that you've been hands off on Apple here since it a while ago after it hit an all-time high. You had an upside target.
Oh, we were suggesting shorts on Apple.
But isn't Apple looking tasty here? I mean, this thing is still 4 points from the high of the move here. Hit 114 yesterday, trading at 110. Disappointing event yesterday here. What's
disappointing event yesterday?
Well, the Apple event, they really just kind of reiterated a bunch of stuff. They didn't really come out with anything new. That's why they whacked the stock.
I'm not sure what you're referring to. I know Apple gapped up on the open, had an outside day reversal to the downside.
Yeah, they had an event yesterday. But anyways, what are your upside targets where you'd get interested taking a potential short in this one?
I think you like you know what? And I'm glad you're asking me about Apple because I think it's a good example in terms of I wouldn't short it today. It already hit our downside target. We had downside targets near $100. That was hit a few weeks ago, and I wouldn't short it today. But I certainly wouldn't be buying it. I would be looking and hoping for a rally in order to get short once again. And I'm looking at that 200-day moving average around $120. That was former support. That was support going back to, early March.
Okay.
When we were in that range. Remember, guys, when, we're talking about in February how, Apple hit our upside target in February and we've been hands off ever since? Well, that range broke down to the downside, and very similar to the S&P 500 in that, actually very, very similar to the S&P 500, that range that resolved to the downside. I think we sell into that strength. I think that 120 area is a good area to sell into. Momentum has not seen any bullish momentum divergences. And don't get me wrong, I'm not suggesting that we get to 120. I don't know that we do or that we don't. But if we do, I would be a very, 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 very aggressive seller.
And it's always about scenario analysis, and that's, how I try to approach the market as well, trying to find that situation. If this stock does this, then I'm going to do this. So we appreciate that, JC, setting up the scenario analysis there. I want to get your thoughts on Twitter before we let you go here, because here's a stock that I think is kind of starting to set up well here too. You had the big sell-off there, the capitulation low from that Monday, and then we've rallied all the way back up here into former resistance, and we're struggling up here again. What are your thoughts on Twitter?
This is one of those names that it just. I'm going to tell you something. Across the board, when I tell you that I couldn't tell you the last time we were in a situation where so many names were in no man's land. When I talk about how many names are in no man's land, well, I wouldn't buy it or I wouldn't short it. But like you just said, and I appreciate that, there are scenarios where I would look for opportunities. Twitter is one of those. I mean, a lot of them are. I could give you 1,000 names that are in that scenario, but we're in such no man's land. No man's land. I wouldn't touch this with my worst enemy's money. I wouldn't get long. I wouldn't get short. And not just Twitter. I can tell you that about 1,000 names. It's not for me. I have no idea. We made new lows, which is great. I've been bearish on the stock. Especially when the all the noisemakers started talking about how they're going to get bought out and rumors, and stock went down 40% after that. So that was great. I love to see that. But it doesn't necessarily mean that it's a buy or a short here.
Okay.
Again, like Apple, like we were saying, if we get that rally, perhaps back towards 33, 34, that former support, I would sell into that aggressively. Doesn't mean I would buy it here for that. Doesn't mean I think it goes there. But if we do, I would be selling aggressively.
One more thing before we let you go, JC. Interest rates here. The Fed, they're not gonna here. A lot was going on with China. I know you've said for a while that you don't think interest rates are going up in September or December. If they do, not very much. What's your take on interest rates?
Well, we're talking about the 10-year yield here?
Yes.
Yeah. I don't know what the Fed's going to do. I've been in the camp, for a long, long, long time that the Fed doesn't control anything. Supply and demand controls interest rates. So in that sense, we're talking about the 10-year yield. When you look at short-term yields, interest rates have been going up for the last couple of years. But if you look at the 2-year yield, for example, and I suppose that's the one that's been technically been going up, but it's running into overhead supply, from 4 or 5 years ago. If you look at the 10-year yield, I'm a big fan, and listeners to your show, and you guys know at this point, when price, and we'll define yield as price for argument's sake in this conversation, when price is anywhere near a flat 200-day moving average, you're asking for headaches. We're right at a flat 200-day moving average. I mean, there's no reason to be involved in the bond market if you're trading 10-year yields or, you're trading base off 10-year yields. I mean, we are getting back to the topic before of no man's land. I mean, there's no reason to be involved. You guys know it's a big bond bull. In June, bonds hit our target. When you talk about TLTs, bonds hit our target. So what do you do when your targets are achieved? You get the hell out of the way, right? Our targets were hit. Our targets were hit what? 2 weeks ago? 3 weeks ago? We were looking for 123 on the TLT. So it was hit a few weeks ago. What do you do now?
Right.
You get the hell out of the way.
Okay.
And look at what bonds. Look at what TLT's done the last 3 weeks. It has been a hot mess. I mean, you can't ask for a bigger headache than TLT over the last 3 weeks after our target was hit. So there's a reason we have these targets. I would stay the hell away from that market.
JC,
it is a mess.
It is a mess. And we're up against a break here. JC Parets, founder of Eagle Bay Capital, 10-year veteran and market technician. JC, glad to have you back. We'll talk to you again soon.
All right, guys. Sorry, I wish I had better things to say, but I mean, it's with the cards that we've been dealt. That's the market we're in, right?
We got it. All right, Dennis.
Thanks, JC.
All right, love you guys.